Welcome to Inside the Brokerage. I'm Karinzo Smith, and this channel is built to help brokers, agents, investors, and consumers better understand the lending and finance world. We'll sit down with lenders, account executives, industry professionals, and business leaders to talk about products, strategies, market trends, and how real deals actually get done. This is not just about mortgages, it's about learning the business behind the business. First, we teach, then we compete. Let's get started. All right, Alex. So I got to start it up here. And today we are here with Alex. Alex is the account executive for HomeXpress Mortgage. And we're just going to go through really quickly a few questions and understanding of the mortgage market conversation. That's the title of this. I'm not sure. I didn't tell you that. So here you go. The title of the whole series is Mortgage Market Conversations. So what we'll do is kind of give you the opportunity to give us a rundown of how you got into the industry yourself.
Absolutely. Well, first of all, thank you so much, Karinzo, for having me here. It's an absolute pleasure. I've been working with Nexa Nation for quite a while. I think it's close to 6 to 7 years. So anything that I can ever do to help you guys out, for those that know me, I'm here, right? Again, I'll introduce myself. My name is Alex Restrepo. I am based out of Atlanta, Georgia. However, I am able to cover the whole country, all the way from Hawaii to down to Florida to New Jersey and pretty much the whole eastern board. So we're here to help. Honestly, I think like most of us got into this industry over 20 years ago just because we needed something to do. I was younger, I needed a job, and somehow, some way, I ended up finding a job as a data input person at a small mom and pop broker shop. Shout out to Walt Warchanowski and US Residential Mortgage a couple of decades ago, but they gave me the opportunity to understand what a 1003 was. They taught me how to spell mortgage because I think not many people do at that point. But it's been a journey, They taught me the skills to be organized and started going up in positions to became a processor for them, became a head processor, then moved on to a lender, was a junior processor, then a processor, ended up becoming a junior underwriter. And then somehow, some way, my boss asked me if I wanted to get into sales. Never in my life I thought I was going to get into sales, but it happened, and that was at a company called Bayrock Mortgage. This was before the financial crisis, of we all remember, and it was just moving from one company to another and doing what we all need to do best, which is networking and shaking hands and meeting people throughout the industry and making sure that you're top of mind for them because you become a good resource. And word of mouth, and I ended up coming here to HomeXpress 4 years next month. And it's been, quite frankly, in all the years that I've been working in the mortgage industry, HomeXpress has been my favorite place. Not saying that the other ones weren't great. It's every single place is a great experience, but HomeXpress has been a home, true to our name. They treat us well. They give us good resources, good opportunities to be able to service our clients in the best way possible. We have a lot of support that help us, to become good AEs, in my case, to be a good AE, and to be able to take time and do these type of interviews without being rushed that, oh my God, the ceiling is falling on me because we're literally in the last week of the month and I have numbers to hit. Like, I already doubled my goal on the 15th of this month, because that's the type of company I work for. They allow us to hit our goals quickly so we can focus on building more relationships.
Awesome. I can tell you that it is tough getting someone to do these calls later in the month, right? Especially it's two times, right? So the end of the week and later in the month, that can become difficult to get these things done. So
for sure.
For brokers or agents who might not be familiar with HomeXpress, how would you explain who HomeXpress is and where you fit in the lending space?
So I tend to use a little bit of not a play, but I just tell people to imagine the lending world being the ocean, right? And anything that's agency pretty much, and not specific to that size, but FHA, VA, conventional, USDA are very specific in what they want in their guidelines, and that's the water inside a swimming pool. And then the non-QM world is pretty much the water of the ocean. There's thousands and thousands of possibilities because there's so many lenders out there willing to take a risk based on what they want to make money off, if you will. So HomeXpress is a lender that we actually have a foot in the pool, 1 foot in the ocean, because we want to do both, but we want to do them right. So we want to give everybody an option to that. Regarding the non-QM world, it's thinking a little bit outside the box to help those borrowers that do not fit in perfectly into that agency category. Again, the conventionals, the FHAs, the VAs of the world. So we give options to these type of borrowers that are still well qualified, that it makes sense. A lot of them are very wealthy people, but sometimes their money is not on paper and you can't go conventional. And we've done a really good job for over a decade to be able to provide options for these type of borrowers. So we're a stellar non-QM lender, which, by the way, I forgot to mention since we started, Nexa is already a correspondent lender with HomeXpress, and we can deep dive, take a deeper dive into that later. But that's something important for every Nexan that is seeing this to know is that that's even more resources and better options for you guys because, first of all, it's more money.
I like the way you mentioned having the pool analogy there, having a foot in the pool and one in the ocean, coming from the retail space as well. You're kind of like stuck in a box, right? You only present what's given to you from that specific retail provider and the options they have. So it's awesome that you all have so many options that you can help with. And what would you say, like in today's market, what type of borrower scenarios are you seeing the most in demand right now?
I think it's two types of customers right now that at least I see because of the product mix that we offer. Is number one, the investor borrower. Now they either go with showing their money, they're self-employed, or regardless, you can prove their income, or the DSCR. I think a lot of people hear DSCR. Some understand it very well, some don't, and they tend to run away with it because they don't understand it or they don't know how to structure a DSCR loan. A quick plug about HomeXpress is that we've been doing these for a while. So any account executive at HomeXpress, we're well prepared to help structure these deals because this is our arena. This is where we jump. We didn't just pick up non-QM lending a couple of years ago. This is how we started, and that is how we're going to continue. So self-employed borrowers, investors, a lot of folks that are transitioning from a W-2 job to being self-employed. Those are the type of people that we work very well with.
Yeah, so I've noticed that as well in today's market. It is more borrower investors, people looking at those DSCR options. Do you think it's, I guess this isn't so much in kind of the same realm of where we are now, but on the opposite side of that, like people who want to buy homes as their primary residence, do you find something like a product or program that you all have that's helping those individuals out?
Oh, for sure. Yeah. So people that want to buy prime. So I'll give you a prime example. Someone who is a business owner. Let's say Joe owns a landscaping company and he makes very good money, but a lot of his money is coming through his bank. He's not putting in his taxes because he writes off a lot. I mean, it's normal for self-employed people to have a ton of write-offs, right? So when you bring your 1040 and you try to go conventional, oh, this guy is not going to qualify for the home that he wants or he needs. But we, as a non-QM lender, we've established a way of assessing this risk by looking at the deposits at their bank on their bank statements, how many accounts that they have. And this, based on the business description, we say, okay, maybe their expense factor is this. Consider that kind of like the DTIs to a certain point. And we're able to lend these to these individuals. We were able to understand their position, and we are able to take on the risk, if you will, of that collateral being, yes, we're going to lend to this person because, I mean, they got, the individual has a 780 FICO. They've got, ton of money in the bank, but nobody wants to give them a loan because it doesn't fit square into that conventional guideline. So yeah, HomeXpress, we have products for that. Non-QM lenders, all of us pretty much have resources to help them out with.
Awesome, awesome. So that's pretty much a bank statement loan, right?
A bank statement loan for sure. There's also another one for there's folks that are very cash heavy. They don't get a whole lot of money, so we can go into an asset depletion situation. So somebody who's recently retired, or somebody maybe let's say somebody sold their house, $1.5 million. They have 1.5 million sitting in the bank, and now they want to buy a house. They want to use a loan, and who's going to lend them money if they don't have a job? Yeah. Well, let's deplete that money and we create an income off of that. So there's creative ways of making these type of situations work for borrowers that are credit worthy.
Awesome. So I'm going to ask about a scenario a little later down the line here. Maybe we can talk about an asset depletion scenario. I've never done one before, so that's really interesting how those work. But as far as like HomeXpress being really heavy in the non-QM space, I know we just spoke about like bank statement loans and the asset depletion. How would you explain non-QM to a new broker, like a real estate agent or consumer, without making it overly complicated? So if I was trying to like explain that bank statement or asset depletion to someone I was trying to kind of bring in as a client.
So I would call non-QM basically just an alternate highway to obtain financing for folks that don't meet the very, and I shouldn't say this in a very respectful way, but and don't meet the very square requirements of QM financing. So non-QM is just other ways at looking at the same problem and providing a solution to obtain financing.
Okay. Yeah, I like that. And I know we just said kind of square box, right? So basically, we don't want to take that circle and try to put it in a square and try to make it fit. So if I'm out and I'm searching and I'm networking and I run into a lot of times, I know about DSCR because I run into a lot of investors. But outside of investors, like what type of client could I like focus on or like kind of put my attention towards when it comes to a non-QM option versus that traditional option?
Okay, well, I think that one perfect borrower is kind of a unicorn. So that's the beauty about non-QM is that you can serve just about every borrower based on the risk that we're willing to take. Like at HomeXpress, we can go down to 600 FICO on non-QM, and not many lenders may do that, but we also go up very high FICOs. And so it just really depends on the situation. So, I mean, ideally, you want someone who has money in the bank, because non-QM usually wants to see a borrower with reserves in the bank, right? That's something that's very different. We've reduced or we're scaled back our requirements to the amount of months or the amounts of seasoning just because it makes sense at this point. But the ideal borrower is just a borrower that meets our guidelines. So in regards to that meets our credit scores, that meets the trade land requirement. Personally, my favorite borrower is the one that got the CTC just because we got it done for them. So.
Right. I understand that. It's kind of like not closing your stuff off to anyone, right? There's a possibility with whoever you kind of meet and can work with. So maybe you can walk me through a product or a program that HomeXpress has that brokers should be paying closer attention to right now.
Okay, well, I'm going to use both my two scenarios the two loan programs that we do very well, which is geared towards our investors and our self-employed borrowers. So going back to what we said a little bit, you got that borrower that is self-employed. They can't get, their taxes are not the money that they can use. So that's one easy borrower. We like to calculate the bank, the income up front for you guys. So you just upload the bank statements to our portal, click a couple buttons, and it goes into a queue. Our team uses artificial intelligence to help, expedite this process. That's a easy type of deal that you want to work with. I'll give you a specific scenario. I have a gentleman right now. We're about to do his sixth loan, in Arizona. He owns a big trucking company, right? And he's buying a ton of investment property. We first started going DSCR for him, but we started realizing that the rents weren't being supported, or the mortgage wasn't being supported by the rents. He was always below 1 DSCR. So after a long conversation with the loan officer, we realized that this guy's through his business, he makes a lot of money. He's a very, very good businessman. So now we pivoted to using his bank statements. It's still an investment product for a self-employed borrower, but we can actually use his DTI instead of the DSCR to calculate him with. So we have a mix of self-employed, investor, and using bank statements to qualify. And these loans are coming in and out quickly because he's like every month he's buying a property. Every month he's buying a property. So that's one that we like to do a lot. One that we do a lot also for self-employed borrowers, and I'll use the same example for a trucker, is someone, let's say they used to work for Amazon or FedEx, right? And they used to drive the trucks, and they decided to step out and start driving on their own, and they got their own truck, but they've only been doing that for 12 months. Usually everybody wants to see people to be self-employed for 24 months. We will use 12 months of self-employment history and 12 months of bank statements as long as you can show us that this borrower has transitioned from a W-2 job in the same industry to what they're doing now.
Awesome. I actually ran into a client that was looking for something like that. They were working with another lender at first, but people call me more for like educational things. So he was reaching out and he was letting me know that he did transition from basically working under someone to being an owner operator. And, you're trying to get into a home at the same time and trying to find someone that can structure something just like you said there. We're using not so much of a timeline of understanding, but getting the understanding but still also understanding that this person is qualified and capable of making those payments. What would you say some common mistakes you've seen brokers make when trying to structure those type of loans, or alternative documentation they might use to kind of get those loans to go ahead to CTC?
I think that some of the common mistakes up front, when some loan officers, they speak to the borrowers, is thinking that they may not qualify. That's the number, because a lot of times I have conversations with loan officers and they're like, I just spoke with this guy, but I don't know, or they get the information from their realtor partner and they just don't obtain enough information. One beautiful thing about non-QM is that there's so many options. So it's always important for you to have a conversation with the borrower to truly understand what the story is. Once you know that you can walk into properly structuring your scenario. Another mistake is, again, going back to not asking the questions, is on a self-employed borrower, we use a lot what we call an expense ratio. Some lenders have a fixed expense ratio. We don't. We listen to what the borrower does, because a person that owns a restaurant doesn't make the same money as a graphic designer or don't have the same expenses as a graphic designer, right? A graphic designer has a computer and subscription system software, yada, yada, yada. So we need to understand that. Once we understand that information and that comes from you, then when we calculate the bank statement information, we're going to be a little bit more accurate and help you structure that deal in a way that, okay, now I know my borrower can qualify for this much more. So those are some of the common mistakes. The other common mistakes is, again, when you're doing the work up front, structuring the loan is so important. So looking at the documentation that is provided to you by the borrower. So if, again, Joe applies for the loan and he hands you his bank statements, but then you see Mary on a bank statement, that means there's two people on the bank statement. Who is Mary? Is she part of the company? Because Mary's going to have to come on the loan. Right? So those are the things that a lot of times people don't look at. We as AEs, we help restructure the loan, but we're just listening to the story and we're telling you how to tell it better to our underwriters. But if there's documentation, it's always wise to discuss everything. Think of your AE almost like your psychologist or your lawyer. It's a confidential conversation. we're very ethical and we're going to do it the right way. But sometimes you just need to understand the story to structure it properly.
Awesome. Those are really good tips there. And as far as like, so for those clients and those investor clients we may have, how would you say understanding DSCR or business purpose lending could help identify more clients and more opportunities?
Well, it's going on for those investors, those borrowers that are looking to expand their portfolio. Think of investors in the business purpose arena is these are folks that they're making these decisions to make more money. So you want to go after these, number one, because as they grow their portfolio, they become more sophisticated borrowers. They understand numbers better. So every next loan that you do with them, it should be easier for you because number one, now you're both speaking the same language. Number two, they understand how the process works. Number three, they know what type of property they look for that's going to fit with the already happening. Because a lot of times, first-time investors almost buy the investment house as if they're going to live in it because they're thinking, oh, well, I'm going to do this, I'm going to do that. They're not thinking the dollar sign. But once you educate your borrowers into that, it's going to make your life easier to structure these business purpose files. So you want to go after the investors, people that are high net worth, people that want to make more money because they want to continue coming to you because you make their life easier and you're making them money.
Absolutely. So in that process, what would you say a broker should know before submitting one of those files to HomeXpress to kind of make that process smoother from the beginning?
Number one, going back to structuring the loan, is check their credit. Make sure they have the scores, the trade lines. Ask them how much money they have in the bank. And then there's resources online. Like our portal has a free tool that tell you what it's called. Where'd it go? Rental report, and you literally just enter the address of the property and some very basic information like how many bedrooms, how many bathrooms it has. And this is going to give you a rental analysis report, and it's going to give you a lot of comparables, and it's going to give you an estimate on how much rent this property can fetch. And there's also other resources that are free online, like Rentcast, that can give you these reports, and that's going to help you when you're having a conversation with your borrower. It's going to give you a little bit more of an educated conversation. Be like, okay, 123 Main Street in Nashville, Tennessee is going to give you an average of $2,000 a month in rent. Now the house is worth this amount. Do you think it's going to ratio out? Well, maybe I don't think so. So then maybe now you're going to have to consider putting more money down or buying down the rate. Or if they can qualify using their income, then you restructure the loan. So those are the things that's the kind of research that you want to do with these. These is not just fill out an application, run through AUS and send to the lender. Like these, you can structure a little bit better up front, and you're going to have a very, very, very easy process in underwriting.
Yeah. So quick question then. I've ran into like some scenarios or even heard of scenarios where a person might not have went through a fix and flip process the proper way and received permits. But when they get an appraisal, the appraiser will, for DSCR loans and rental loans, consider like if they made a living space, like there was not so much added or registered with the county. So now it reads differently on the appraisal, and they give them a little bit more for that. Have you ran into those type of scenarios as well?
I don't believe I have, but I have heard a situation. So what you're saying is that they renovated the property, but the process wasn't done with all the permits. So when the appraiser comes and reviews the property, they're basically hitting the borrower for not checking all the boxes, if you will.
Well, they're kind of allowing them more. So I might not see it online as a 3-bedroom, 2-bath, but they created a new living space that the appraiser will give them credit for. So now it's more of a 4-bedroom, 2-bath, and now
so
they
like
get a little bit
converted garage or something like that.
Yeah.
Okay, if it wasn't done anywhere, like if it's not legal, like we will, because title is going to tell us, the appraisal is going to be like, yeah, there's a garage that was converted, and they'll usually provide a cost to cure to revert back to a garage. But if it wasn't done with permit, unfortunately is going to turn into an issue, at least for us.
Okay.
We're gonna push back on that because I mean it's a whole slew, it's a long explanation behind that. But for us, like if we sell to an investor, they'll be like, okay, no, this is a 3-bedroom house, not a 4-bedroom. That garage, that's still a garage. So we would, it's not as appealing for an investor. So you definitely want to make sure those are the things that you have to have this conversation with your borrowers,
Yeah.
or all the repairs done with permits.
Yeah, and okay, so as far as like HomeXpress's approach, how would you say you all approach borrowers who have a strong overall profile, but not perfectly fit for something like agency guidelines? I know we spoke a lot about how you could want to make sure they have the funds, you want to make sure they have the credit, and those things that could really help out. But is there any other strong overall steps or process that you would think could help someone fit into a non-QM space?
It's a good question. I think just the multiple options and products that we have. There's more than one approach, I think. Sorry, I got to think on that one a little bit. You want to start, for me, my approach when I'm helping someone structure a loan is you start with what's their score, and it kind of gives you the mindset of what kind of product and what kind of avenue you're going to go with, and what's the purpose of the loan that they're trying to do. So the HomeXpress approach is tell me the story. Tell me what is going on with this particular borrower, and does it make sense, right? Because one thing that HomeXpress teaches us is, although I proudly wear the HomeXpress badge on my chest, right? But I still have to be respectful of the company I work for and the money. So if I'm HomeXpress and somebody comes to me and says, hey, will you lend me $300,000 to buy a house? Well, does it make sense? So not just because they have a low FICO, but they have a big down payment, we can consider it. And one thing that our management team is very proud of talking about is that our guidelines are based off exceptions. So we continually evolve our guidelines as we see. So we're willing to listen. We're willing to make sense of things. Like you said, if a borrower has a lot of money in the bank, but they don't have very good credit, well, we look at compensating factors. We get an exception. Like, I'll give you an example right now. I have a loan right now. It's a very, very big loan, close to $1 million. The guy is, he's a healthcare professional. He just forgot to make his mortgage payment in April. And obviously to put the loan in a bind. Right now we're in the process, and I'm pretty confident we're going to get an exception to go a higher tier on the LTV, because the guys have perfect credit all his life. He just made a mistake. He's got enough money in the bank to pay, for the next 12 months. So it was a mistake. Just tell us the story. Let's make it make sense to management so they don't consider this a bad loan, and we'll move forward.
Awesome. Being open-minded like that, I think, is really great for borrowers.
Oh, for sure. Yes.
And I guess us as brokers as well, because it's several times I've ran into situations where the story, I think, doesn't really make sense to the underwriter when they're just receiving the file. So having like an account executive that could help you better understand the client and what you're trying to achieve to then convey that story and that message is awesome. A quick question here. I know we're going to switch gears a little bit as far as like products. So it's for like ITIN or foreign national borrowers, what should brokers and agents understand about that opportunity and the documentations needed for that?
Okay, so there's actually a difference between a foreign national and someone who may have an I-10. So we used to offer I-10. We no longer have that product, but we still do a lot of deals for foreign nationals. So the first thing you need to know the difference is, where does this individual live? If they live here in the United States, then we consider them NPRAs are non-permanent resident aliens. These are folks that are obviously either not U.S. citizens or do not hold a permanent resident alien card. These are folks that may be here on a COA visa, which are usually political asylum holders, people that may be on a work visa. I mean, there's a few categories of visas that we will consider. These are non-permanent resident aliens, and then foreign nationals are folks that live outside of the United States, reside in another country, and they just want to buy and invest in our country because they feel like it's a safer investment. So we get a lot of foreign nationals, like a lot of folks from Canada. Especially my loan officers. I have a loan officer in the state of Washington who works with a lot of Canadian citizens that are looking to buy in the northern Washington area, right? And we can lend to them without the need of a U.S. credit report. We just look at credit references and just kind of quoting Jerry Maguire, just show me the money and we'll make it work.
Yeah.
I just aged myself right there.
No. I got that one. I like it. Yeah, I'm based in Ohio. Very close to Cleveland. So I see a lot of Canadian investors have like kind of started to investing in the Cleveland area. So it's really good to know that you have that option. And
For sure.
I'm going to backtrack us a little bit here. I know we spoke earlier about the asset depletion. What can you tell me a little bit about that process? So I've never done one before. I've seen the guidelines, but I don't know if I can like wrap my head around exactly how to get something like that done.
So specific to our guidelines, there's two ways that you can approach that. Number one is that the person has 125% of the loan amount in funds, or we will divide the funds over 60 months and give them an income over that. So based on the type of account, we take a percentage, okay? But let's just say you have a borrower, we verified the account, they've got $1 million in the bank. We're going to divide $1 million over 60 months, basically 5 years. That's the income that we're going to be using. And then they just qualify easily. So it's basically, as the word says, you're just depleting that income month by month in doing that.
Okay, and you just mentioned the accounts though. So I know a lot of times the type of account can make a big difference. So is that like a brokerage account or is it a 401k or just?
It depends on the account. I have to get a little bit more specific in the guidelines. I apologize, I don't remember exactly, but usually depends on the type of guideline and also the age of the person. Like certain borrowers, like if they're at retirement age, their account turns into a brokerage account and we take the 90%, I believe it is. So
okay. Yeah. So that's kind of like some of the things I've heard. I'm always running into like seeing those. I'm like, how does that work? Like how can someone use assets to purchase a home when you don't really, I guess maybe they do have income, but it doesn't, I guess, meet the standard to qualify. Like Social Security isn't like something that's enough for them. So do you do like a combination of incomes? Would you do asset depletion along with? Okay.
Yes, you read my mind. So we do those a lot. So there's a lot of folks that have side income, right? I mean, you got someone who can work a 9 to 5 in the office, but on the weekends they sell their on Amazon, and they sell on eBay, or they do landscaping work, or they do Uber, whatever it is that they do. We will combine those incomes with the bank statement. So you can take someone who's W-2 and then they have the self-employed income, and we can combine the both of them, or 3 types of income, or whatever it is. Like I said, just tell us the story and we're going to tell you exactly how to structure the file. So when it goes into underwriting, it makes sense.
Awesome. So what would you say makes a strong submission to HomeXpress, and what can a broker do upfront to help your team move faster?
What can you, obtain? So we have in our portal, we have 2 columns. One is the required documentation. The other one is the optional documentation. I think that it's just getting, number one, the income information up front. So when the underwriter gets to the file, can probably calculate the income number to make sure that your collateral is solid. So when you submit the loan, look up the property, take a Google search on it, look at the street, make sure that the house is actually there. I had a scare a few weeks ago where the borrower bought the house. He didn't tell anybody. He knocked it down and built a brand new house on it, but we had no record of it. When we look at the street view, it was just vacant land.
Yeah.
Right. So my underwriter comes to me and is like, Alex, we don't lend on vacant land. I was like, wait, hold on. Let me find out what's going on. And that was that. But my loan officer didn't tell me that that's what the borrower did.
Mm-hmm.
Right. So the main thing is know your scenario. So when you submit the file, you know that your property is solid. If it's an investor product, make sure you have a good idea what the rents are. If you have a good relationship with the title company, have them give you that title search and kind of look if there's any liens or anything going on with the property that can topple the loan. Now, that is not required to submit the loan. Personally, I like lien files. If it's a purchase, all we're asking you to give us is a purchase contract, the credit report, and the application, and that's going to get you an underwriting approval. I like that because an underwriter is going to review the file. They're going to do their normal searches and all that stuff. But it's kind of having the underwriter tell you, hey, Karinzo, this is what I want to see to approve this loan. A lot of times, too much information up front, it just mind boggles the information to the underwriter. Some loan officers are very good and they can pre-underwrite a file, but some of them, they just dump everything in there. Sometimes there's information in there that you don't want an underwriter to see. Not that you need to hide. I'm not encouraging anybody to hide or anything. It's just making sure that the data that you have, make sure it's vetted, because if it's not going to go anywhere, why submit a loan, right?
Yeah. Yeah, I love that approach. I like to take the approach of like give them what they ask for and no more. But I do like to over communicate with my aides, right? If I'm communicating with an aide, I'm going to give you as much information as I can so you can make sure that I'm headed down the right path. But when it comes to like receiving, I guess those required documentation notes and things, I'm just like, hey, let's just give them exactly what they ask for.
For sure. And taking this a step further, that communication also needs to trickle down to your processor, because I know that some loan officers trust very much in their processors, and there's some amazing processors, and shout out to the S&P processors that are listening to this, because there's some really good ones out there. But sometimes there's other processors that they become paper pushers. They're very transactional, and I say this with very much respect, but if they don't review the paperwork that they're submitting, they can kill the deal.
Yeah, absolutely.
Because I was a processor too, and something I forgot to mention at the beginning is I was a loan officer for 3 years as well. So I've worn almost every hat except for management in this mortgage industry world. So I know where we all come from. I know what it feels. I know what it is, going after real estate to send you business and chasing borrowers and meeting borrowers at 2 a.m. in the morning because this guy worked hard to get them to sign paperwork. So we're your allies. We're just like you guys. We don't get paid until you get paid.
Absolutely. I know what I'll take from this, right? I'll really get a good understanding of exactly what you all do as far as being really good at non-QM. They're having the ability to combine both of those incomes to get a deal done for someone, as well as also seeing more DSCR investor-friendly deals coming through now. It's better options for people. But what would you want people, or at least one thing you think people should take from this conversation about HomeXpress Mortgage?
I want people to know that HomeXpress is not just another non-QM lender. I want people to realize that HomeXpress is a mortgage company that has made it a habit of training its account executives very well, making us experts in our products. We don't know all the answers, but we know someone who will. We have the resources. HomeXpress is a company that's given us multiple products, so not just investor products, but anything that can be considered outside of the agency world. There's an option out there. Again, we can't do it all, but HomeXpress loves doing non-QM, and we love doing agency as well. We do FHAs, VAs, and conventionals very, very good. We have an amazing team out of our corporate office who manage all those resources. So we're a big go-to lender, and we're happy that we have an amazing partnership with Nexa Lending, with Mike Cordes and the rest of the team. They're giving us an amazing opportunity, and all we want to do is just to prove to you guys that we're here to be a longtime partner, not just a solution to getting us some few loans done.
Absolutely. I would say the relationship with Nessa is really great. I know in our internal page where we all go back and forth, we're giving each other tips. HomeXpress comes up as one of those lenders we look at a lot. So for any broker, agent, investor, borrower watching this, what is the best way to connect with you and HomeXpress and learn more about your programs or that we discussed today and products we discussed today?
Okay, so if you have an account executive already assigned, obviously your AE, we're all available through email, through phone calls, through text messages, however it is they need to reach us. We are very good. I can speak very well of my fellow colleagues because I know we make an effort to make ourselves available. We do go to sleep from time to time, so maybe during those times we don't answer. But yeah, for me personally, you can find me in the LOS just about every day. But Tuesdays, I share the room with other AEs, but I'm in the LOS a lot of hours. I've been doing that for close to 7 years. I love doing screen shares. I love using arrows, pointing things out to people. It's fun because it gives me an opportunity to train everybody, and it goes a long way because it helps you guys become more independent, and that's the whole purpose of being, on your side, the broker side, and on the retail side, is that it's being independent. So that's how you can find me. In the LOS, my information is there. There's a link to contact me to send me a request. If you don't have credentials, please reach out. Again, Alex Restrepo. My number is 678-224-0887. And I'm sure the information is going to have my email address, but it's Restrepo, ARESTREPO at HomeXMortgage.com. Hit me up, and I'll be more than happy to, help you guys structure deals. And if I can't do it, I'll try to help you find who can do it.
Excellent. Well, thank you once again for your time, Alex. I really appreciate it. Hopefully we can continue to do some work together, me and you as well.
I appreciate it. I look forward to that, man. Absolutely. You gave me an opportunity, a beautiful opportunity to speak to all of Nexa Nation. It means a lot to me. I've met many of you guys that are listening to this in person, shaking hands. One of my favorite things in the year is to go to Nexa Fest. I hope to be invited this year again. So I truly have a lot of respect for Nexa.
Awesome. Thank you again.
Thank you, Karinzo. Have a good one.